Welcome to the Integrated Advisory Series, where we talk about the evolution of wealth management and how a client's most trusted advisor, their accountant, will lead this evolution. I'm your host, David Judy, and I'm joined by my co-host, partner, and good friend, Tim Copeland. Welcome back to the Integrated Advisory Series. During the last episode, we talked a little bit about the difference between a plan, delivering a plan, and actually doing planning. And I want to spend a little bit of time, Tim, having you explain, first of all, what the heck does that mean? All right?
Yeah. I think financial planning as a whole, if you could kind of go back in time, most organizations, the whole premise behind it was to do some planning, run some modeling, and ultimately try and get to some recommendations that lead to selling product.
Right.
And the usual experience that clients would have is they'd get the big binder like we talked about. It'd be overwhelming. They've got a whole bunch of things that they're supposed to take action on, but the planner really isn't too focused on helping them manage.
Okay, let's make this personal because somebody delivered that.
Yeah.
Right?
Yeah.
The two of us.
Yeah.
I think it's important that the key learnings of some of this, we both started that way. I mean, the whole idea was the value proposition was the thickness and the depth of the binder.
Yeah. You wanted to show how smart you were.
And show how smart we were.
Yeah.
But that was challenging for the two of us. But, but that was it. That was the value proposition. I think a lot of people, and even a lot of the firms that we talk today, when we talk about financial planning, that's what they think. They think, okay, well, how am I going to incorporate this hourly billable process where I'm going to deliver this plan to people? And that's absolutely, we're 180 degrees from that today on how we develop the business.
Well, and I think it's that concept that it's a plan.
Right.
As soon as you say you've got a plan, okay, well, what are you going to do with it? And this is where this evolution, it's planning, which means it's ongoing.
Right.
You're always looking at it. It's not static. And so I think the other thing that's really changed to allow that to happen is technology's improved.
Right.
Okay. If you think of what financial planning really is all about, it's integrating a bunch of functional disciplines. So looking at cash flow budget management, retirement planning and projections, investment reviews and planning, risk management, looking at insurance, tax planning, which is woven and why accountants in this process are so important because it affects everything.
All of those, right.
Estate planning. So there's these functional areas that require experience to be able to do all of that. And so what would happen is people would go through an exercise of collecting all this information. They get asked a whole bunch of different questions across a variety of areas. And then what would happen as advisors, as planners, we'd take all that information behind the scenes, we'd run it through some software, we'd do some math, and then we'd come back and we'd try and justify our advice to the clients. And it wasn't a really collaborative learning experience. And when you look at what's required for people to make informed decisions, they need to learn. They need to understand. And it needs to feel like they get it, it's their idea. And technology wasn't in a place even 5 years ago to some degree where you could do that and create that kind of an experience.
And you'd never pull up the technology in front of the client because it was so complicated that you'd look like you were going to fumble your way through something. It just was not interactive.
Right.
So what do we, when we're collaborating with firms, when we're helping these financial planners within the firms and the advisors themselves, what types of technology do we use today? And what's the difference of that experience versus maybe where we were 5 years ago?
Yeah, we've there's a number of tech solutions that are available to firms and planners. We're always taking a look at them. We're always reviewing whether the current stuff we're working with is making sense, because it's always changing.
Right.
It's always getting better. 5 years ago, it wasn't cloud-based. It was on your server, you worked through it was slow and clunky. Today it's cloud-based, it's interactive, and you're getting to a stage where even the data is being pulled. There's account aggregation. Before you used to have to go through this exercise of getting every statement, every document, reviewing it, putting it into the system. So it's come a long ways where the focus, where truly where the value is in the planning process is with the client face to face. It's being able to put up, numbers on the screen, projections on the screen, work with the client to look at it differently.
Scenarios.
Yeah, run scenarios, have them ask questions, have them go, well, what if it happened this way? And you can quickly adapt and make those changes. Before you couldn't do that, as you said, because the system, the tech was too slow. You'd sit there for a half an hour remodeling it, and it was a poor experience. So really it was all about, in the past, sitting in front of the client and trying to justify the numbers so that you didn't have to do it on the fly.
Exactly.
Today you want to do it on the fly, and the technology's in place.
Well, I think it's fascinating because now you sit down and someone says, well, I know that we talked about, we've got a second home, a vacation property, to make sure we reach our financial aspirations and our income needs. I think we're for sure going to have to sell that. So let's look at liquidating that at such and such a point. And in the past, that was then part of the binder and you delivered that and that's where it went. Today, it would be, well, why don't we look at both options? And it's fascinating. In many cases, you go, well, let's run this without liquidating, the family vacation property and look at that as a legacy. How much of a shortfall are you going to have? And then we can model that in real time. And all of a sudden, the client says, do you know what? I need estate planning advice because I want to be able to pass that to the next generation because I don't need those assets. So there's so many intricacies in being able to run those scenarios live, I think changes the dynamic of the conversation.
It really does. And I also think from being a past tax advisor and accounting professional, a lot of cases we know there are certain solutions that clients should take advantage of.
Right.
Okay. And the challenge is we struggled because we weren't having broad enough conversations. We weren't integrating retirement planning and projections. We weren't making it real for people. So a simple example would be you need a family trust, and it's going to save you, taxes.
Yep.
And clients would sort of look at us and go, well, I get it in theory, and lots of people would take advantage and move forward. But we never really quantified it. We never really showed them. We never made it visual for them to help make a really informed decision. And I think this is where the integration of financial planning with accounting and tax and sort of being able to model things out and opportunities or solutions out to show the true impact. You can now make it real for people. You can go, well, if we don't do it, if we do the do nothing, this is where you're going to land. And you may be just fine, or we might have an issue.
Right.
But if we do these 2 or 3 things, maybe it's a holding company and a family trust, or maybe we tweak your investments a little bit this way, or we do something with your insurance, here's how this changes your financial outcomes and how it gets you closer to your goals. And that type of a process is much more, has a higher success rate of having people actually take action.
Absolutely.
And so I think that's where financial planning is going today. But it's also not, as I said earlier in the other episodes, it's not trying to, eat the elephant in one bite. People can get very overwhelmed. These are complex discussions. There's lots of moving parts. It's very easy, and that's the experience we've gained by being in this business a long time, is to not overwhelm people. And I think this concept back to plan versus planning, and why our process in the earlier episode of discovery, really what we're trying to get it down to is we're not selling plans. We used to, in the past, the first meeting was we're going to do a plan.
Correct.
And clients would be like, well, I've been through that, or what's this mean? And it just felt a bit daunting. We now take it to a higher level, have a discovery conversation, and then we're able to focus on certain elements of a plan. So they may be more concerned about their investment strategy at the moment. So we can go do an investment review through the accounting firms. Okay, their financial planner in-house with the accountant has the ability to review investment statements, focus on ways in which to add more value to improve it, and then move it towards maybe execution with a resource partner or the existing investment manager. Same thing with retirement planning. We can take and go through a specific piece if they're trying to figure out if they have enough money or they're saving enough. We can take them through more of a visual exercise. We can also just look at risk management. What are the risks in your life? Are you positioned properly to address those? And so I think that's a bit of this evolution, is start with what the client tells you is important, build confidence, add some value, and ultimately the goal is to look at the whole picture with them.
Sure, it's holistic.
But you're going to let them drive the bus instead of going, you need to do it all now.
And I think that the hardest thing to do in business is bring simplicity.
Right.
The hardest thing to do in telling a story or getting someone to take action is how do we bring simplicity? And unfortunately, when you're dealing with wealth management, whether it be the accounting side or the investing side, there's a lot of complexity. And complexity, unfortunately, it forces people not to take action. So anything we can do to simplify that process, to lay it out professionally, makes an enormous difference. The other thing that I'll say is it's all about perceived value. I hate to break it to anybody, but it is totally irrelevant what you actually bring to the table for value. The only relevance is the perceived value the client has on what you bring to the table. And financial plans were the perfect example. We charged $5,000, $10,000 to create this static binder, and none of it was really done in front of the client, other than ask the questions in front of the client and deliver the binder in an hour and a half, and then you charge them $5,000, $10,000. We sometimes will sit down with an interactive software program, have the client involved in that, just touch on the topic, and their perceived value was 3-4 times more than us giving them a $5,000, $10,000 bill.
Right.
Yeah.
Yeah. I think that at the core of that, David, is having a consulting relationship.
Right.
Versus a process that's not flexible. So if all you're doing is positioning that you need this plan, there's not enough flexibility within that. And I think where we've evolved with our process, we can do plans. We can go through, look at everything. But the experience is clients, they tend to have things they need to deal with. And we want to be able to have a model through the accounting firms that is flexible to allow them to focus on services. And ultimately, we may have clients that come in and go, I want to look at it all. That's great. But we've got services positioned that we can combine those services into a bigger service offering. But it's also okay if you just want us to handle this piece for you right now.
Well, and the services is the residual revenue.
Right.
Right? The services are the compensation. And it really allows you to have a relationship where the client's not looking at their watch going, well, I've been here for an hour and a half or 2 hours. What's the bill going to be? Right. We can add value knowing that 90 some odd % of the time, we're going to have solutions for them that are going to produce long-term revenue for the firm.
Exactly. And I think what we're able to bring to the table, just from experience in working with firms, is a sense of, well, what does the market bear? Right. So, if we're going to do investment reviews, what do the fees look like? How do we structure it professionally so that it feels really not a lot different than the services and the things that the firm are already doing? Yep. But do it in a way where the cost makes sense, the structure makes sense. But I think that the challenge with this practice is if all you do is deliver that initial planning service, it's really tough to make this a profitable model.
Absolutely.
You hear a lot about that. That's the other learnings we have in looking at U.S. firms. You hear a lot about fee-only, service-only, fee-only types of models with this. The challenge that they have is the margins. It's almost like you're selling time again.
Well, you are selling time again.
And, with personal financial planning, because a lot of the competition is doing it for free, it's a challenge to try and find a point that justifies the value that you're adding in the planning process.
So that phrase drives me crazy, so I'm not going to let you leave that one, doing it for free. So that was exactly the comment that young, accountant basically that was working at TD brought in and said, we just provide corporate returns for free. Okay, nothing's for free. And I hate to break it to anybody, even this part, and we're talking about planning and asking these questions, this isn't for free. We know if we make this investment of time, focus, and understanding, that we're going to generate significant long-term revenue with that client relationship. Yeah. And you can't do that on an hourly model. It's impossible if you've got to track all of that, and then, because so much of it is non-perceived value.
Right. I think the other reality of what we're trying to do is we're trying to improve the financial services industry, not become it.
That's a great point.
I think the goal there with accountants is they've already structured their relationships as consultants. They've done it. We don't need to add anything new there. We just need to carry on with what they're already doing. Clients are used to being proposed a service through an accounting firm. They understand that there's fees. And they understand that they get value and professionalism through the delivery of those services. The idea isn't to come at them with something that isn't like that, where all of a sudden it's a freebie.
No,
because as soon as they do that, we've changed the way the accountant is perceived in the client's eyes. This is about continuing on with what they've already built and being able to deliver services that add value for reasonable fees that make sense. And then ultimately moving them more towards management. Okay, so from planning to the management of the planning. Yep. And I think that's the disconnect that firms that have built this, the beauty of where we're at in Canada today is there hasn't been a lot of failures, okay? We got a clean
because there hasn't been a lot of participants,
there hasn't been.
Right?
Exactly. And the environment hasn't necessarily supported that. So, but we have the ability to look at what worked and what didn't work. And there's many, many examples outside of Canada of failures of trying to make this work, okay? The one common theme is that if you want a business model where you can continue to grow, create sustainable growth, add more talent, add more people, really deliver that comprehensive model, you have to be in the management side of that, and you have to participate in the revenue that's generated as part of that phase. Because you can't, being able to participate in asset management, we're going to talk about that in the next episode, but being able to participate in asset management fees, being able to participate in other products and services that are coming, that's how you make this business unit really make sense. And that's how you get to a stage, as we've said earlier, where you start to create different multiples based on the value you have in your practice. It's a critical piece in learning of doing this right.
Yeah. Well, let's close on that, because I'd like to transition to the next episode where we're really going to focus on, well, how does the investment side of the business work? How do we focus that? Obviously, we think of the world a little bit differently on our model, but more importantly, the importance of creating that residual income on an integrated basis. So let's talk about that next.
I hope that you enjoyed this episode of the Integrated Advisory Podcast. If you'd like to see how much Integrated Advisory can boost the bottom line of your firm, visit integratedadvisory.ca/calculator to download our Integrated Advisory Revenue Calculator. This resource will show you how to grow your firm without having to increase the number of hours you work. Visit integratedadvisory.ca/calculator. Download the free calculator today.